What's up, everybody? This is Jimmy with Trading Decoded. It is June 6th, 2024, 4:04 in the afternoon, and the market is closed, thankfully. Today was a grind, the first half of the day, especially. Very slow mover. Wasn't very fun. In fact, it was so not fun that as a group, we voted to shut the room down at 12 o'clock this afternoon. Now, lo and behold, we did get some movement later on in the day, but a lot of people break a whole bunch of rules waiting for that time of day and end up doing more damage than good by trying to watch a chart that's not worth trading. Again, guys, I don't care what you do with your money, obviously. It's not really my job to trade your accounts, and I don't aim to do that. What I am trying to make you aware of is, first and foremost, knowing where your weaknesses are as a trader. Because if you understand that you suffer from specific weaknesses, and when I say weaknesses, I mean, do you overtrade? Do you hold losers too long? Do you play too aggressively? Do you counter trend trade? Do you buy calls on support? Do you buy puts at resistance? Are you doing the opposite? Wherever those weaknesses are, if you don't have the discipline to work on or fix them, or can afford to work on them, because truthfully, a lot of people, you can work on a problem for eternity and still never resolve the issue. Okay? For me personally, I know where my weaknesses are as a trader, and instead of trying to fix them or overcome them, I just do everything I can to avoid putting myself in a situation to even have to face them. For example, if I have a stop loss on the chart in place, meaning not a mechanical stop, I don't use mechanical stops, but if I get into a trade, I know that if price closes above this line here, I got to stop out of the trade. I know for a fact that if I choose not to stop out of that trade at that time, it 100% will turn into a hold and hope trade. I know that about myself. So instead of trying to figure out how to fix that, I just use that fear of holding and hoping to create the discipline required to stop out where I'm supposed to. Okay? So that's all I'm saying. If you know that your weakness is keeping your hands under your butt, sitting on your hands while the chart is doing nothing, if you have an issue where you feel the need to trade every time a candlestick is printing, when there is a sideways moving chart or not a very aggressive moving chart, you might find yourself just trading for the sake of trading. And that becomes a very dangerous situation. But I digress. Aside from that, for our members in the community who weren't up this morning, we did a live charting session again. It was an impromptu one, but the reason I did it is because I wanted to show you guys how I come up with my levels high when there are no proven levels of resistance, because we're at all-time highs. So check that out. For our paying members, it is in the video section under the live charting sessions. So let's go ahead and launch a chart and see what we had going on today. Pretty much lackluster in pre-market today. Our pre-market midline not only had yesterday's high of day, it also had a futures line and support and resistance from pre-market this morning. That was a trifecta that I wasn't really excited about. Our call line was a candle close above 535.09. Our put line was a candle close below 534.34, with all the same rules intact, meaning if we can cross the line here on SPY, but if Qs are sitting on a support, you don't want to buy those puts, okay? Likewise, you can buy your calls when we close above the call line. Just make sure that some kind of momentum, whether it's ADD or Qs or just make sure that something, specifically for me, it's Qs, is not at a line of resistance. Now, before the market even opened today, I told everybody, loud and clear. I have a problem comfortably playing calls when those calls are being taken at all-time highs. It is not my inability to believe or accept that the market can go higher. It's not that at all. It's just that I don't have a solid line to aim for that gives me the confidence to say, okay, well, we crossed this all-time high resistance. Let's just get in. I like to know where the finish line is when I get into a race. Okay, I want to know when I can let off the gas. I want to know when I can stop sprinting. Without the finish line, it's no different than somebody saying, hey, Jimmy, we're going to go ahead and start the race when I say go, and I'll just let you know when it's over. You can't run forever. So for me, I like to know where that finish line is so that I know where to aim for. And without proven levels of resistance, because we're at all-time highs, we don't have them, I can draw lines where they're likely to be. And we did that, and we had a target. But I know that that's not anything more than a calculated line using math. Okay, so I don't trust it as much as I trust these guys here or these guys down here. Okay, so I was not going to be playing calls. The only time I was going to be playing calls, and I made this abundantly clear, is if we pull back to a line of support that which gives us room to move up to an established line of resistance. That's it. However, we went in and we were talking about also, guys, if you want to play aggressively, we have a solid line of resistance here. The only beautiful part about this is if you choose to get in, we know that if we close above it, we got to get out of that trade. Otherwise, let's see if we can at least get down to this crazy trifecta line right here, pre-market mid. We hope we get through the pre-market mid and come down to this double bottom here, or maybe even our pre-market low line. But, what we want and what we get are two different things quite often, actually. However, the one thing, because I took this trade and so did a bunch of other people, and those who didn't take that trade subsequently ended up taking the call trade. Now, you might be saying to yourself, Jimmy, you lost money on this trade, didn't you? And you would be right if I was only paying attention to SPY, because I would have, if I was only trading or paying attention to SPY, had to stop out of that trade here. But guess what was happening during this entire time? Look at that right there. I don't trade against the Qs, guys. Now, I got in because it looked like the Qs were going to try and make a rundown. They did not break that support, which was unfortunate. And I told everybody, same rules for the stopping out. If we close above this and you don't feel comfortable, go ahead and get out on SPY. If the Qs close above their pre-market high line, I'm getting out of my puts. It never did that. And this became very uncomfortable, this trade, when ADD was pulling SPY up, but the Qs had nothing to do with it. So I kept saying to myself, man, and I think I got down about $160 a contract per contract on this move to the upside. Okay. But aside from that, we got in here, we were aiming to go down to here, which is Qs coming here. Okay, their first target low. That's what we wanted. Now, we had to hold through this pullback on SPY, which was never a pullback on Qs. That was an interesting thing and weird. But nonetheless, we stayed in because of that. But we had folks play the calls here. We closed above it. We're looking for the next line up. We got within 3 cents of it. That's why I have a 5-cent rule. Within 5 cents of any line of resistance, you got to start considering the potential for taking profits, because not all of these lines hit exactly. I mean, you can look at some of these lines, which again are drawn at 8:30 in the morning, an hour before market opens, and see that they are sometimes deadly accurate. Okay. And so we don't know if we're going to get exactly to the line, if we're going to get slightly through the line, if we're going to fall short of the line. So just be prepared as we move closer to the lines to either set a stop that's in profit or be ready to just mark it out of your trade. Okay, now this was a 40-cent move up, more than the 20 cents we typically look for. This paid people money. This was a one and done trade for several people. We had people take puts here and got out here. Again, just about a 40-cent move to the downside. If you bought resistance, sold support. Bought support, sold resistance. Played the break of resistance to the next resistance. At this point, we were putting in higher lows. I mean, the market seemed to be relatively happy until it wasn't. But it was a tight, slow ranging day for the most part. Now, for us holding our puts, we never closed above that pre-market high on the Qs. What we were hoping for at this point was a close below the pre-market midline so that we can feel pretty confident about moving down to the pre-market low line. It did exactly that. Once we closed below this line, it was like a huge sigh of relief for all of us that were holding these puts because we had a better opportunity, a better chance of making it down to this line here. Now, as we move down to this line, tell everybody right around 949, guys, it's 949. Qs are at support. SPY has not yet moved all the way back down to that trifecta line. But if you got in here, you might be looking at the opportunity to get out at break even if this was too uncomfortable for you. Or you hang in there and figure out, hey, are we going to make it to our target? We held, okay? We put in a lower high. Right then, I felt much, much better about this trade. Why? Because we were moving down, we broke support. We pulled back, creating a lower high. That tells me that this support is more likely to fail than to hold. Now we came down to that support, pulled back, got below the pink line, turned it into resistance, another lower high, ultimately giving us the okay to hold longer. We broke support. And if that happens during a downtrend, what are we looking for? We're looking for the move to continue down to the next support, which is right here. As we break through that, I was like, yes, let's go. I will be getting out as soon as the Qs get to, near, or slightly through that orange line down there. Period. End of story. I was tired of feeling uncomfortable in that trade. I was happy to be back in profit on that trade. Ended up knocking it out for a 32.5% win. Now, we had several people take profits here because we were coming down to the line in the Qs, plus it was a strong supported pre-market right there. After that, there was nothing else here that enticed me even a little bit. Qs were kind of being funky and tight. ADD was flat. It wasn't great. We did trend down, and if you held through that, you probably could have made some money. We made it down to 3 of our targets low, which, by the way, these lines, they work, guys. Just learn how to draw them and use them as a tool in your trading. Just give it a try. There's not a single indicator on this chart. There doesn't need to be. And I'm not suggesting that you must trade without indicators. I'm just saying that for a lot of people, those indicators are false senses of security. Okay? I don't care what your indicator says. It's lagging, number one. And if you need it because it's giving you a feel-good feeling, that's a crutch, in my opinion. Now, volume I can understand as being important. I probably should use that myself, but I'm also trading SPY, which is basically the highest volume stock for the most part that you're going to find in the market. So volume's typically not an issue, and it's very easy to spot when you have low volume anyway without a volume indicator. However, we were out of here by 12 o'clock, so I wasn't here. By the time we finished today, we were still in a very, very tight range, all things considered, and finally started to get out of the range, hitting these lines of support, moving back up to resistance, back down to support, back up to resistance, where we stayed below the pink line once we closed back below it. This final time here, we never got back above it again. And I'm interested to see what our poll looks like, because there's a lot of people who continue to trade throughout the day, and this wasn't the kindest of charts, I got to tell you. So if you did well today, congratulations. If you blue booked it today, meaning you took no trades, good for you. That's a very difficult thing to do, even for me, and several other people, because so many of us have this desire to constantly trade because it's fun. It's sometimes painful. It's exciting when you're winning. It's sucky when you're losing. And when you're losing and you take a losing trade, of course, naturally, we want to go back in and undo that loss by trying to take another trade that hopefully becomes a winner. And if that winner becomes makes us closer to break even or slightly above break even, you start to wonder, oh, well, I just had a good trade, and that one losing trade was just a whim, and I won't make that mistake again. And this looks like an amazing chart to trade, and I'm green but not green enough. Let's go in and take another one. And then the domino effect has started, because if that third trade ends up being a red trade, are you going to walk away then? No, you're not. You're going to keep playing that game until your buying power's gone, or your account's gone, or you hit the number that you think you deserve to hit. You know, it's a dangerous game. It's a dangerous game. Now, a lot of people ask me, Jimmy, you know, why are you one and done? Well, I'm one and done because I know that every trade I take after the first one has the emotion overflow from the trade prior to it, good and bad. Guys, there is a time where you can get so confident because you just feel like you can't lose, and promise you're going to hit that trade going into a trade that way that's going to give you the biggest loss you could take for the day, sometimes ever. You know, overconfidence, the emotional side of this business is catastrophic. It's catastrophic. So I try to limit my emotions by taking the fewest amount of trades, knowing that each trade that I take progressively going through the day becomes more and more emotionally involved. Again, I don't try and fool myself. I don't try to trick myself into believing that my win rate and my ability in the way I trade works the same way all day long. It doesn't. I play same day expirations. I got theta to worry about. I've got support and resistance that's being built throughout the chart for the entire day that I either have to learn how to ignore that they exist or respect them. And if you respect them, and on a chart like this, they're all over the place. There's not enough room to make a trade that I'm comfortable doing, right? These are all rules based on what breaking them does to me. And when I break rules, I usually lose money, and I don't like to lose money. And I'm sure you don't either. So if you're consistently losing money, you need to take a good hard look at what is causing that loss and fix it, or stop doing it. Sometimes the best resolve is doing less. And I'm going to leave you guys with the one question that I ask everybody in our community all the time. And I'm going to preface it with this. If you are that guy or girl that answers yes to this question, please send me a DM or leave a comment in this video. I would like to shake your hand, because in the 3.5 years that I've been trying to help people learn how to trade, not one out of thousands has answered yes to the question I'm about to ask you. Now, how many of you have come to find that the more trades you take per day yields you a higher win percentage on the day? Now, I will not argue that there are some days that it feels like you can't lose, and maybe you don't, no matter how many trades you take. But over the course of a period of time, more trades doesn't equal more money. And if I'm glad to be wrong, and I would love to find the person that would say otherwise, I'm not even going to argue with you. I won't even question whether it's for real or not. I would just like to say, you are unique, and you should feel special and proud of the fact that you were able to continue to trade all day long and never take additional losses or continue to trade with less and less emotion or no emotion at all. I personally don't believe it's possible to trade without emotion. I do believe you come to a point where you can manage the emotions enough to keep them out of making decisions in your trades. But it still feels good to make money, and it still hurts to lose money, and I don't care how much money you got. So to say that there's no emotion involved, I disagree. But with that, we're going to wrap it up. I hope you guys found some useful information in this video. If you did, please like, share, and subscribe. If you'd like to join our Discord community, we'd love to have you. For those of you who are in our Discord community, I am having a Jimmy talk tonight. We're going to be touching on quite a few things that have to do with trading and the trading psychology and some pitfalls that some folks are having that they didn't used to have. And there's reasons for everything. The things that make trading hard is a small list of things, right? So I can tell you what you're suffering from on a list. You just got to tell me which one of those things it is, and then I can tell you how you can work on it. Whether you choose to accept my resolve for these problems is completely up to you. As I could tell you what I know works and what I know doesn't work. I can't make you implement these things. All right. So tonight, 9:30 Eastern, if you are on our server, feel free to jump in. You can ask questions, but I'm going to give you, if you haven't watched my Jimmy Talk video that I posted on my YouTube channel, it's basically one of those. And that's pretty much it. So I hope you all had a fantastic day. Tomorrow, hopefully we get a mover because we have a lot of reports coming out. That would be good. And that's it. So thank you guys for watching. Till tomorrow, I love you guys.